Welcome to TopstepTV. This is the London session. My name is Deeyana Angelo. I've been trading futures for 12 years, but I've actually been trading for much longer than that, coming up to 17 years. I generally specialize in crude oil and gold, and I occasionally also do a few equities trades, and recently I've been trading Nikkei. Usually I would trade DAX, but we don't have it yet on Topstep. So while we wait for that, DAX is going to have to be on the back burner. And instead of that, I have been focusing on some Nikkei trades for this session, whilst we analyze what's going on with other instruments such as gold and crude oil and platinum and anything else of interest. Now, I am in a Nikkei trade, so I will be explaining what's going on there. I see that we already have some questions, and we also have a couple from yesterday, so I'm going to be dedicating this session to explain some of the more intricate parts of how you can read TPO profile, how you can maybe add to positions and all of that good stuff. Before we carry on, I'm gonna just do some plugs here. So we have a replay of Brian Shannon's visit yesterday. He is he specializes in VWAP, right? He is the man for VWAP. And if you missed his segment, I highly suggest that you go and watch it, because he was saying some things about how he uses VWAP that is markedly different from what I see. Most of the people, when they use VWAP, they're just like, hey, I'm going long of VWAP or short of VWAP. That's not how he was using it. He was using a number of different anchored VWAPs and then looking for effectively a break above it. So almost like a momentum breakout trade. So something to consider. So I am going to see if I can get the link in. I don't think they've got the link in the notes. But basically it was yesterday around 1 p.m. CT, Central. So yeah, check that out. Very eye-opening, and I think most people have been using VWAP in a little bit of a wrong way, if I dare say. Now, next thing, we have Pass with the Pros segment. We are basically doing this thing where you can pass with the pros. If you want to pass your trading combine live on air with the team, that is something we're doing. It is starting today, actually. So if you're interested in taking part in that segment, here is the link. And finally, we have Topstep Discord. If you are looking for a trading buddy, if you're looking to interact with the Topstep community even more, Topstep Discord is where it's at. I have seen some people asking, where do I go? I want to ask more questions. Well, all of our lovely coaches are in Topstep Discord. They each have their designated rooms. They have a bunch of videos that they have been making over the last couple of years or so. And they're very, very worth checking out. So I'm just going to pop that into chat as well. So let's see. What happened to my Nikkei trade from yesterday? It lost. I had a losing day in my XFAs yesterday. You can't win them all. And so today is inventories day, and I don't really like trading Wednesdays because they tend to be middle of the week. The moves tend to be a little bit muted on crude oil as well. So usually I spend Wednesday doing some more combines, and if I decide that I see something super obvious, I might even do a live trade. But today I'm also on fast markets. So again, that adds an additional layer of pressure. And, inventories are on Wednesday, and they're literally like my least favorite day on crude oil. If you look at some stats from Edgeful, you will notice that Wednesdays are actually the worst trend days on crude oil, and there's a very good reason for that, because the inventories are storm in a teacup, as I like to call them. Usually we get a lot of algo spaz reaction, and then nothing happens. So if you're going to trade your live accounts on those kind of days, probably not the best choice. Which is why we go to combined, accounts. But some people may even consider doing a practice account where you have zero risk. For me, there's no point going into a practice account, but removing risk to me is just getting a bunch of combines. So yeah, let's address some of the questions that came in before I started streaming. So one of them was by Dave's Pirate Live. Would you be so kind as to talk a bit about poor highs, poor lows for the TPOs, especially during the developing session? More specifically, how do you feel about fading a poor high within the London session? Okay, so look, which product are we talking about? Because I can have a look at it in more detail. But basically, the poor highs and poor lows, I think they are a little bit misunderstood, because when it comes to any sort of analysis about the poor high and poor low, ideally you want to look for them after a trending move. To me, in our tests, because I do have a software team that helps me look at some stats that are maybe not available from things like Hedgeful. The poor high, poor lows. If you're having a meandering neutral day type, is really a poor high and poor low a good signal for anything? Not really, right? It has much more strength if you've had a trending move and then they're not able to carry on with the move. And thereby, what is a poor high, poor low? It's when you have two TPOs right next to each other. So sort of like a double top situation. And then they're not able to go higher. Those, to me, statistically, empirically, have a lot more relevance than anything that you might observe on a quieter day. So, Dave's Pirate Life, to answer your question, I don't consider poor highs, poor lows in any session relevant unless I see them after a trending move, okay? This is also a reason why I don't really spend time teaching that, because I've observed that they're not as relevant. Now, what is the implication of the poor high, poor low when you do see that double top? The premise is that if you see a double top, that at some point they're going to be smashed through, right? They're going to be taken out. But again, we have to take in the day type into consideration, not just, oh, there's a poor high, poor low. Like, I think a lot of people don't necessarily go into too much detail about it, and then they make observations based on slight misconceptions. So my whole YouTube channel over on Marcus Talker D is about lifting the veil of misconceptions on profile and some of the other tools that we use in order to have a lens into the market. So because of that, poor highs, poor lows to me are not that relevant, especially if it's an out of hours session. You're probably not going to have super crazy moves on most days, and frankly, the takeout of those weak highs and weak lows are best looked at as a scalp through the next day, not in the same session. I would like to see them remain for today, and then tomorrow when we come to trade, they can offer an opportunity to scalp through them. But on the day, they're just as good as any other reversal that doesn't have the poor high, poor low. So I will actually not pay that much attention to them. So hopefully that makes sense. Michelle says, hey Dee, have you had a chance to check out the new Edgeful London live stats? Yes, I have been looking at it. I have my own analysis, so it's not like I'm scanning through, 15, 20 different products. Really, I only observe about 4 or 5 at any given time, and sometimes even 3, it will be plenty. It depends what's going on. But generally, yes, I think it's useful. I think it would be more useful in something like stocks, single stocks, if that's what you're trading, because stock traders tend to find stocks in play, like what's in play. Whereas with futures trading, we have our own designated products that we've learned to the core, and you're not going to be necessarily jumping from one to the next, to the next, to the next. So less useful, but still, not bad if you, for example, want to have a look at Nikkei. And we can have a look at what they say for Nikkei. They're saying gap up forming. Now, that is for New York. Well, let's see what London says. Again, I'm a little bit annoyed here because they're starting London at 2 a.m., which doesn't even make much sense. London starts at 3 a.m., not 2 a.m., so I'm not sure what's going on there. I can reach out to Andre to see if they can perhaps make that into a custom session, even if they don't want to add it as a default. So to me, this is slightly slightly tricky, right? I would probably be looking at New York session to have some more relevant data, because even though this is an out-of-hour session for this particular thing, I do agree with the bearish bias, and I'm going to explain why in a minute. But for now, yes, it's an interesting thing to have the live data from Edgewell. However, I think they're just in the beginning of kind of getting that out to everyone and seeing how you can use it. But if I go on to the daily chart, so this is why I'm in this trade. So here's Nikkei on the daily chart. We have a bearish engulfing, right? Have a bearish engulfing. And if I go on to the weekly chart, we have a supply. So we have a supply, weekly supply, rejection of the weekly supply. And now I would be looking for signs of a continuation. I'm just going to clear my throat. Now, upon my review of my trading yesterday, I realized that I missed certain clues, and I kind of maybe got a little bit too zoomed into the TPOs and value areas. So unfortunately, obviously that leads to, a losing trade. I was looking for a breakout, even though I knew that we were coming into the weekly supply, and I actually didn't have my weekly plan in front of me. Also something to consider. I went with a value acceptance yesterday. However, we did have some gamma walls right around there as well. And I totally ignored the failed auction that came as a result of hitting those levels. And then naturally it just carried on. So this was the failed auction from a gamma wall. And it just kept going, right? And this is something that I do use in my playbooks, but if you don't follow your plans and you have something else going on, you have too many things going on, you will miss clues. And I'm going to try not to do that today. So right now we don't have any kind of an extension, but equally we are hitting some relevant levels on Nikkei that are telling me that this is now bearish, which is why I'm in a short today. So we'll see. We have some levels at 37,865, but the one that I really want to aim for is all the way down at 37,705, and then further down 37,432 as kind of like the maximum level that we can actually get to. But new reversals at supply can lead to single direction days. So this is probably not going to be a double V-shaped kind of activity today. Let me see what we have for the news as well, so that we're not... Yeah, so not much. We have new home sales at 3 p.m. That's probably going to mostly impact equities and gold. And then, yeah, we have the dreaded crude oil inventories. So, yeah, not much on the calendar today. All right. Let's have a look at some of the other markets here. I'm looking at gold here. I mean, it does seem like it's topping out. All-time high, you know, what do you make of that? They're kind of always losing power. So every time we go into an all-time high, they lose power. And it's like, then we have a little bit of a sell-off. Then they find more buyers a little bit lower down and they push it again. So is that going to happen on gold? It's very bullish at the moment. On a 4-hour chart, we're above a whole bunch of EMAs. No real observable levels to fall back on. So yeah, gold, you know, might be a bit tricky today. But let's have a look at the profile. What is gold doing? That is on my other chart, so just give me a chance. I mean, surprise, surprise, we're opening with a gap. We are actually quite far away from London value. So that usually means that's not really a gap potential. Although we are less than 1% distance. So we're 0.88%. So kind of on the cusp of being a pretty big gap. Anything over 1% distance from the value, and value high, value edge is at 26.56. That, to me, constitutes more a bullish outlook. Why? Because in those days, usually we end up in a neutral day type. So range-bound day situation. And for now, this actually looks a little bearish to me. But again, because of that big gap, maybe having a neutral day hypothesis would be a better choice here. So just looking for price to establish a range, maybe even to rotate to the other side of the initial balance. And then we can maybe look to fade those edges. Keeping in mind that the longs will be maybe a little bit stronger, even though we have failed the auction and we're right now dead in the middle of the entire profile for the day. So the initial balance was here. So that was the initial balance, and we kind of popped a little bit outside of it and then came back in to close that 30-minute time frame inside it. That constitutes a failed move, failed auction that didn't have enough juice in it to keep going. And I mean, it's not the biggest day. This whole move is 87 ticks. So for the moment, I'm not really that interested in gold. But yeah, I am bearish on gold for today. So if I can see a setup that makes sense, I will absolutely get involved. Bruno, can we just kick this ZM guy because he's adding a whole bunch of nonsense? Just a quick Google search, you will see what I was talking about. And yeah, so he's just annoying me. And I mean, I can kick him as well because we don't need that. If you're here to argue, have a look at yourself, man. It's like, you know, you come onto a live stream randomly and then start arguing with people that have gone through something themselves, and then you're spreading misinformation, you're spreading negativity, and yeah, that's just not what we're here about. We need to keep it positive. There's a lot of trolling in this industry, and us at Topstep, we are trying not to encourage that sort of activity. I know that for, some people that's a favorite pastime because they're keyboard warriors, but please get yourself off of this stream because that is not how we do things. And again, look at yourself in the mirror next time and ask yourself, do I want to be a nasty person today, just coming onto a random live stream to be a again, I'm not gonna use swear words and stuff, but you're being not nice. Let's put it that way. If we were like in a different environment and on my own live streams, I would definitely say what you are. So yeah, let's just get rid of that. Thank you, Bruno. Really appreciate that. So Kurt says, what do you think about gold retesting the value high? You're talking about the value high from COMEX, I think. That is not a level that is relevant at the moment because those are different players, right? So now acceptance of COMEX value is not going to be of relevance during London. When you look at the London value area, we're very far away from it. And it's all the way down to 26.56.2. And so we compare session to session, right? Not New York session to London session. So I'm just going to put that in here so we can visualize it. Mornings and bright lights don't mix. 26.56. So yeah, this is how far away it is. That's London value, right? We're miles away. There it is, London value high. But still, this distance from it is still, below the 1%, which is why it's still possible. And what you're talking about is this COMEX value high, which is sitting around here. But we cannot mix apples and oranges. Like, it's okay to look at the previous session highs and lows as a potential to take out those stop runs through those session highs and lows are actually a high probability play. But if you're looking at it from let's just mix a distribution curve from an entirely different session with entirely different players, that introduces a level of inconsistency and data pollution. Because they don't have the same intentions. And a lot of the time, London will take it one way, and then New York will take it the other way. So, they have very, very different intentions. Cal's Loy says, hello, Deeyana, first time in London open session. Welcome. Very good to have you here. Yeah, so for gold, I don't have a good setup. If we go into gap fill, so the London value gap fill, we would need to see some commitment below this, whatever this is, 26.74.4, to then create sort of the asymmetrical neutral day. So asymmetrical neutral days are my concept, where even though you have a neutral day, one side moves a lot more and therefore leaves a single prince upon doing it. Usually I like to pair that up with something like a gap fill so that we have a reason why that would happen. If we were to open inside value, we would be opening inside balance, and that sort of a move, while possible, it kind of occurs at a rate of about 8% of the time. So it's not the most frequently occurring move, but when I do see the single prints being left behind on a neutral day, I don't go against them. So I will try to get in on a directional move if it makes sense with the playbook that we're looking at. So yeah. 7777 Lucky says, can we really trade and make profit by trading using the low high of the market and act that? No. So this is the thing. The likelihood of the previous session high and low is going to be completely like, not breaking anything, is very low. What they do is they do stop runs through the previous session highs and lows if that kind of a day sets up. If we're away from the session, let's say we moved away for New York, but we still have Tokyo left in the dust somewhere lower down, it's not really a matter of whether you're going to use the Tokyo or overnight highs and lows for support. It's to do with whether we're accepting the area or not, and frequently you will see the acceptance of those session areas. So the entire session area sort of becomes like a value. That's something to consider. But again, it will be a case by case. You cannot, point blank apply a single strategy to all days, because we have different day types. Is it a range bound day? Is it a trend type day? Is it just a limited auction day where we sort of popped outside of the first hour trading range, but we kind of failed to advance more? That's yet another day type that has some direction, but it's not exactly trending, right? So all of that, to me, is a pretty important piece of information and a data point that we have to take in. I am very big on stats and on the stats around actual market events rather than just your own stats. Your own stats are very important, obviously, but when it comes to looking at just pure price activity, I like to back things up with how many times did this event happen. Like, for example, failed auctions, one of my favorite setups. How many times do they happen? At what time of the day do they happen? But at what time of the day are they low probability? So, for example, on crude oil, I know that they're most highly obvious and very successful right after the initial balance in the first half hour. But within like the first couple of hours of NYMEX, you can also take it as a good signal. Anything over that, the more you get into settlement time, the less likely it is that if you see a failed auction, it's going to have follow through. So again, that means that failed auctions, if you do see it post New York lunchtime, that's a low odd setup. And therefore, I would look maybe for a continuation away from the initial balance rather than a failure and complete rotation through it. Because if you go back and you try to figure out how many times this has happened, you will see that in like the period of like sample size of 2 years, you only have like a few days, maybe like 3 or 4 days when a full failed auction appeared for that time of day. I put huge emphasis on time of day as well. So once I pair out the playbooks with the time of day, with the type of the setup, you can actually get a lot of information that will help your decision making, right? All right, so High D looks like a failed downside auction in equities. Let's have a look. And Rob Walsh says, what is the difference with your MAs? They're all 9s. Yeah, it's just a high, low, and close. It's just like a basic measure. Just in case we go into a trend, I want to make sure that I notice that. And if we start to flatten the curve, that's also something to consider, the curve of the MAs. But I don't really use 9 EMAs in too many decision making. Like, if I have a failed auction and it's still sloping upwards, but we've hit the supply on a 4-hour chart, I will take that any day. I don't really care what the EMAs are looking like at the time. But some people use it for more trendy type products. So it's a good gauge to more for me, more so to get me out of a trade if I am in a trending move. So let me find ES. So let's see. Yeah, we're failing the auction on ES. However, I can see that it is very P-shape oriented with a lot of passive buying, it seems. Passive buying meaning some wicks that we keep getting. So if I show you the 30-minute chart here, You see these wicks? It's like, yes, we failed the auction right about here with this red candle, popped outside, failed the auction. But I don't want to see wicks when we're going to do failed auctions, because this means there are buyers present. And because it's a P-shaped day, so this is like moved up and then created a P-shape, that means it's some kind of short covering in progress, if we can believe it at these levels. We have a balance from Asia trading around these areas. So this could take some time. I don't think this is a very good outlook. We did accept value to the upside from yesterday's London, so that's bullish. But at the same time, they failed to give us follow through, and now we have a failed auction against it. Let me just have a look at what's going on with option data. Okay, so we have some gamma walls up at 5800s. That was there yesterday too. I mean, there is a level right where we bounced off at 57.75. So yeah, to me this is looking more bullish than anything. So I wouldn't be short equities right now, or at least not ES. Maybe it's because Nikkei has that whole, it's not nowhere near all-time highs. It reversed, and it's a different market. They also have this thing happening with the yen. You know, they held their rates, and you know, technically that should be not that great for their index. So there's macro stuff that is coming into consideration. Yeah, so equities today, to me, New York based equities, so New York Stock Exchange, ES, NQ, not really looking that bearish. So I wouldn't consider this failed auction valid. DAX looks more valid though, because again, DAX is not near all-time highs. It's not, you know, it's not looking like it wants to bounce further upside, that we have some reversals in progress. So yeah, when it comes to ES, probably even NQ, because they tend to follow each other pretty closely, I would not be looking for shorts at the moment, right? It can change, right? But right now I'm seeing some passive buying. I'm seeing some value acceptances. We are at very close to all-time highs. Yeah, I would need a little bit more conviction in that move. P-shaped day also not great for shorting against it. And most of the time, if you do have this distribution happening, like we see here, they tend to get stuck inside it for quite a while, and then at some point they will break out of that. But yeah, I would deem this failed auction not relevant because of the contextual nature of where we are, chart location, what's happening in the world, the market, and large time frames, and also some gamma walls that are also very reactive, right? So we had one down here, and now the next one is at 5800. So yeah, I think we might see 5800s this week. But you know, it's my humble view. Yeah. Okay, so let's see what we are doing with questions. Dee, can you please review where we are heading in crude? So I don't have a crystal ball, but I can have a look. Just joking. So where are we heading in crude? I mean, nobody really knows, right? But what I can do is just give you an analysis and all the stuff that we can see, that everybody else can see as well. So let's do that. But, you know, any sort of conjecture over, oh, we're definitely going that way, I'm actually against that, because there is no way that anyone can know anything. And at the end of the day, I stick away from conjecture. I can just tell you what we have at this level and what price is already done at that level. So thereby, you're not extrapolating the psychic moments and, you know, crystal ball vibes, Mystic Meg sort of thing. You're probably not from the UK, so maybe you don't know who Mystic Meg was. But yeah, a very well-known fortune teller. Yeah, so basically what I can see is that we do have a recovery in progress, and that we are starting to accept some of the areas from the previous weeks, right? So we kind of tried to go against it, but we still have those, you know, lower highs and lower lows in progress. So does this actually change anything markedly in that very big time frame? No. But let's have a look at the daily chart. And same thing. What do I have? I have a daily supply that was more of a speed bump. So it was a very staircase-like looking supply. So we had a drop, then a base, then a drop, then a base, then a drop. And that means that we have a whole bunch of balance up there. Very frequently, the market will migrate back to that balance before it does anything. So let me just make these much smaller. And that introduces more time. So rather than looking for a very fast movement and some crazy, you know, momentums, having a balance anywhere, or building balance all the way up or the way down, that will always introduce time. So really, if I want to get involved in a directional move that's going to be easy and it's going to happen very quickly, I would want to see a thinner volume area. This is how you can use volume to your advantage. And where is that? Well, nowhere in the perceivable range, right? I mean, if we go further back, we can see that the low volume area is actually up at 76.64 and then extends all the way up to 78. So that would be a better area for quicker shorts. And then anything else, again, the further back you go, you can sort of do the same sort of analysis. But yeah, I wouldn't be expecting fireworks here. Now, obviously, it's intraday, everything can happen. But yeah, for now, what I can see is that this current supply inside this area of balance at 72.27 has brought us in some sellers. So you see how it's not conjecture. It's like, oh, I think it's going to go down. No, I can see that we've had a selling wick yesterday, but it's sort of crawling, right? It's kind of like going up, then we did nothing, popped up, sold off, nothing. So I might be leaning a little bit more towards a bearish move, but again, it really depends how they react yet again around 72.32. That would become an area of interest for today. Bear in mind we have the inventories today, which is usually just a whole bunch of nothing. As Hogue says, it's a nothing burger. And I don't really expect that to change. Now, when it comes to some gamma areas that we can provide some more zoomed in views, I had a level at 72.34 as the, you know, reversal point for this idea, and we got there in the yesterday session, right? So now, are we going to get there again? Possibly. So it definitely remains an area of interest for shorts. So I would like to be a seller in that area. Further down, I have room to 71. I also have room all the way down to 69.65, all the way down to where this swing came from. But is that going to be today? No, it's outside of the day's range. So it's not super unusual if crude oil starts to sell off and goes into a massive move down. But at the same time, crude oil recently has been a bit sketchy. So one day we have very good movement, and that might continue for like 2 or 3 days, but then we kind of die a death and we get stuck at about 100 tick range for NYMEX. Yesterday it happened again. I did manage a very small trade on my live account, but it was very small. Like I think I got like 10 ticks out of it or something. Because I was looking for more, and then I held the trade and it just didn't do anything. So again, it got stuck in about 35 tick range for the second part of the session, and that was unusual. And I only got that move that I was looking for very late in the day. I think it was like the last 5 minutes into settlement. So I don't know what the hell they were doing before then, just kind of sitting there looking pretty. Just like, come on, do some trading. What's happening? And, we need larger players to place orders. We need market makers to do their thing. Otherwise, we're not going to have good movement. That's what market makers are there for. So, yeah, I would be looking for a retest of these 72.30s and then possibly some selling to come in. And then to the downside, that becomes very difficult to read. But, round numbers always remain of interest. So 71 maybe for like a very intraday view. And then that's exactly where we kind of bounce from. One thing to take note with crude oil is that it likes the round numbers. So anytime you're looking for a reversal of some kind and you're sort of in no man's land, you're like, 71, 34 or something. That's an odd number. So I would expect to see some sell-off or another push upside to some kind of a perceivable round number, and then to see my setup play out. So that's a little trick with crude oil. Big players like those round areas, so 0.25, 0.50, 0.75 evens. So keep that in mind if you're intending to trade crude oil. Alan de Cocker says, Hi Dee, how do you scale your XFAs after you created the buffer? I built a great buffer in micros and a small DLL, but got burnt when trying to scale up. Yeah, surviving a scale up in XFA, it's very difficult, right? I'm not gonna try and paint a pretty picture when it's one of the toughest things to do, and many people don't survive the scale up, especially if you do it super quick, especially when you're going from micros to minis. So first step, don't go from micros to minis, okay? Go very slow, and really until you're, I would say even 10K of buffer is not enough. I've blown out of XFAs at about 7 to 10K buffer. I would say 20 to 25K would be where you might consider going to minis. And, even that would be maybe just one mini or maybe 10 micros if you're like scaling in and out. If I'm trading that way, if I'm scaling minis, if I'm trading minis, I don't necessarily scale in and out. I just gotta get the whole move and get out. But with the possibility of us having micros and not having commissions on Topstep, that's a huge advantage. So it doesn't matter if you're trading 15 micros, right? Or 12. But next time, I would probably look to have a very, very nicely padded buffer before you try and scale up. Otherwise, you again introduce inconsistency into your trading by going to the bigger size too quickly. And then you can make so much damage even with one micro. And I think people forget that. So they're like, oh, it's just going to be so easy because now I have, 10K. But 10K in trading is nothing, It's one of the reasons why I dislike trading with too much size. I know that recently I have been doing that, but it's tough, man. Like it's really difficult because if you try and scale up and you don't quite have enough buffer in there, you're gonna blow out of the account very quickly. And I actually blew one of them yesterday. So it's like, why? Because I scaled up too quickly. I tried several trades and it just didn't work. And then because I don't have my P&Ls usually on the top, I didn't quite realize how deep into it I went. So I was like, oh, what's happening here? And I'm like, oh, yes, of course. So, we all have those moments of overtrading, losing a little bit of control, or maybe getting a little bit more confident, or, thinking you can do no wrong. And really, in order for you to give yourself enough swings at the bat, you have to have a very good padded account. 20K, 25K would be kind of the bare minimum for me for minis. Anything under that it's like micros territory. So scaling up, incredibly difficult. Many people don't survive it, and usually the reason is because they go too quickly. They size up too quick. Now I know Hogue says that your biggest scale up will be from 1 mini to 2 minis, but keep in mind that we have micros now, so you don't have to go from 1 to 2 minis. You can go 10 micros, 12 micros, 15 micros, 17 micros, and then maybe 20 at some point. And then you can start thinking of maybe trading 2 minis over 20 micros. And that's all made possible by Topstep X that doesn't have commissions. If you did that on your own live account, any profits that you had would be heavily eroded by the commissions and micros. They are horrendous. So that's why before I wasn't in favor of micros because they were super expensive, but Topstep X has changed the game and you can do that now. So, use it, take advantage of it. Dee, looking at crude oil 1 hour chart, would you consider the possibility that we are in an accumulation schematic? Well, accumulation usually comes from the sell-off, then accumulation, right? If you're going to look at Wyckoff. But, we've gone up and then now we're distributing. So this is actually a distribution, which is followed by what? Liquidation. That's another reason why I'm hypothesizing, and that's all it is. It's just a hypothesis. It doesn't mean that I'm right. And in fact, my own accuracy floats from like 43 up to maybe 55%. So I am wrong a lot, right? But when it comes to the larger time frames, I have a very good idea of what is happening. I'm pretty skilled at that. But I would say that if we do go sideways, so this is more distribution than reaccumulation in crude oil, purely because we've had this huge run up. Where's my pointer? There it is. So huge run up, and now we're kind of distributing. So I would not say we're in accumulation phase. I would say we are in a distribution phase, if that makes sense. But I would say that ES is in an accumulation phase because we're so near all-time highs. And it just keeps doing this reaccumulation, pop up. Same thing with gold, right? We kind of consolidate, then go higher. Consolidate, then go higher. That's unusual. That's reaccumulation and then another leg up. Tom ICT says, D, are market makers or elections or world issues the reason for such a manipulated choppy NASDAQ intraday price action this year? Can this be of all the new retail traders? It will definitely not be because of the new retail traders, right? If that was the case, we would have seen that during COVID when every Tom, Dick, and Harry was a day trader. Everybody turned suddenly into day traders. And yet we saw some of the most beautiful moves and, amazing movement on NASDAQ during those times. I actually traded NASDAQ quite a lot for the 2 years after COVID. And then it got a little bit choppier, and then it got choppier, and then it got choppier. This is normal, guys. So I know that you're all like completely jacked up on momentum on NASDAQ, but this is perfectly normal for market cycles. You will have times when the markets are trending. You will have times when the market is crap, right? It's moving sideways. What can you do about it? Get better at range trading, Don't just go, oh, this is really shit price action. It is, but it's not impossible, right? Somebody like Dolby does great in range-bound markets. So if you learn to recognize those days and then learn to modify your strategy, these days are not going to be troublesome. Most traders who come into this market, they usually get involved because somebody told them that something's moving, and then they get used to, being high on hopium on momentum trading, and never actually tackle range-bound trading, which is a whole different ball game, right? You need to identify first patience, timing, and accuracy are, hallmarks of good range-bound trading. Most people don't have not even one of those, let alone three. So, everybody wants everything right now. So you just keep doing breakout trades or expecting breakout trades and they never come. So it's like, what's happening? Yes, I'm sure that the election year has something to do with it. It's a lot of uncertainty whenever any country is changing the regime, right? Which is what happens with elections. So naturally, that will introduce uncertainty, right? And that never lends itself to nice momentum moves. It's always like, oh, what is the equity going to do now? Oh, how is the market doing as a whole? Are we doing well? Are we not? Are we cutting rates? Are we holding rate? Like what? So, that is like uncertainty. How does that look on the chart? Lack of trending days, right? Same thing in crude oil. Crude oil, I've never seen it. Well, to be fair, I have seen it go dead on me on another election year, 2017. Was it 2017? So the year that Trump got elected, the same thing happened, right? Crude oil was horrible. It was range bound. It was slower. And what do we have this year? Same thing, right? Crude oil that normally goes into 250, 300 tick moves easily, and that's what I've observed over the last 12 years. Suddenly, we have NYMEX at 130 ticks. Like, what is that? It's NYMEX. That's why I said on Twitter yesterday, and NYMEX has lost its balls again. It's like, that's what I meant. It just gets, it gets very range-bound, very difficult, very sluggish, very slow. And absolutely, it is partially a result of the election year being here. And, nobody knows what's going to happen. Nobody wants to put their money, unless they really need to, in, risk commodities, even though that's what they used to do. But this year, they're not doing it, right? They put everything in gold, it looks like. But then another oddity is that before we used to have gold and equities going the opposite directions, right? If you are going... putting your money into equities, you would presumably take some money out of gold, because that's the old portfolio theory. A very well-constructed portfolio will have all the risk assets adjusted for, and then also have a large portion of it in equities. However, if we have some uncertainty and stuff, you may want to put your money in gold, especially at times of high inflation. Traditionally, that's what gold was used for. But this year, we're seeing equities at all-time highs. Yes. We're seeing gold at all-time highs. Tell me another time in history where that's happened before COVID. So, we live in some slightly skewy times at the moment. And that's fine. We have to just adapt and not complain. Just get better, right? This year has been very challenging for me because crude oil is my main product. And I don't have DAX, which is my other main product. So, I've been stuck in sort of a loop where I'm like, come on, something move, please. And it's slow. And there's nothing you can do about it. You can just go, okay, wait it out. And this is why it's important, like I said yesterday, that sometimes you need to move away from trading and go do something else. Now, obviously, for me, I don't have that luxury. We have to be here. But you can control risk through combines. You can control risks through... not trading the accounts where the risk is on the line, maybe lower the size in your personal brokerage accounts. I'm certainly not trading my, 20 to 40 lots there that I used to do. I am down to 3 or 4, and all this year, that's what I've been doing. So, we have to control risk as it comes. But yeah, range-bound days, definitely something to focus your attention on when it comes to skill development. It will serve you very well. Ricky B says, how do you get the volume profile like that on the right side of the chart? This is just the volume profile visible range. So I didn't do anything else but put that indicator on there, and it immediately places it on the right. I mean, you can put it on the left as well, but I just think that looks a little bit weird to me. I like my overall volume profile to be on the right, which is what I have on my other charts as well. The one that you can see that Robert uses, Robert Cooney, one of our lovely coaches, he uses the fixed range profile where you select the indicator, and then you, for example, want to see the current session. So let's go down to, let's say, a 15-minute chart. And then I'm going to show you that. So yeah, those are two different indicators effectively. So the big down candle was the start. So you go to indicators and then you go volume profile fixed range. So you click that and then you go, well, I want to have a look at it from here and then like all the way up. And then that's the one that you will see Robert using, right? So there are two different indicators. This one is the volume profile fixed range, and then we have the volume profile visible range, slightly different information, right? This one only looks at the London start, and this one takes in all of the visible range that you have currently on the chart and can move and adjust to the candle that you have, or whatever range. So it's sort of like a little back test area. So I quite like that. But yeah, so two different indicators, that's all it is. Bob R says, good morning, Dee. Can you show us how you identify supply and demand areas, how to take the wick from the body? So yeah, so not quite. Supply and demand, I could spend like an hour doing just that. So let's go to 4-hour chart, maybe on something that has been a little bit more trending than crude oil. But I also need something that actually had up and down movement, so I can show this. Let's see. Let's see what silver was doing. All right, so this is actually pretty good. So 4-hour chart, silver. When you're looking at supply and demand areas, there are rules around it, right? It's not like I never went to what was the online trading academy back in the day, but one of my friends was working for a bank and he did attend that. So he actually taught me how to look at it from that point of view. First up, you need to identify the swing extremes. A lot of people get chopped up in the middle. So if, for example, you have a move that also has some supplies in the middle, like for example here, you have an obvious supply up here, but then also some mess in the middle. However, the originating areas are up here and down here, right? This is like speed bump for me. So it's usually not a high quality area and you can't really use it without some confirmation. Today, looking at silver, this is a very nice move. So how would you identify the supply or demand? So let's take a look at the demand. The wicks for the demands on the lower side are taken into account as the distal area edge, so distal edge of the demand versus the proximal nearest edge that we can see where the market shift happened. So what does that mean? It means that if I'm looking at the demand area, I will consider the wick to the downside, but I won't consider the wicks to the upside, because the upside for the demand is where the equilibrium was broken to the upside, right? So all of the demand areas have some sort of an equilibrium before the market shift occurs. That's the point of the proximal edge, the nearest edge of the demand area. And vice versa for supplies, right? So you go wicks to the high end are definitely taken into account, but the wicks to the low end are not. You only want to take in the area where the market shift happened. In this case, we had a little doji, and then we consolidated, and then at some point we broke away from it. There are other conditions that you need to take advantage of. Things like how quickly did we move the area? How decisive was the, let's use the ICT term, displacement from the area? If the displacement is sluggish and it kind of, like here, it goes away, comes back in, chops around, doesn't know what it's doing, and then finally makes a move, that will lower the quality of the demand area that you're looking at. But, you know, if it's a swing extreme, then that kind of strengthens the demand area as well. So you have to take a look at the chart location, where we're coming from, how the price left the area. Was there follow through to that area? Ideally, you don't want to see just one pop outside of the area and then nothing. So you want to see one move out, another move out. Ideally, you want to see several candles away from the area, and that also strengthens the demand. Finally, how long did the price stay away from it? That falls into consideration as well. So, for example, if you just have, again, a little bit of a move away, but then after a while, it just quickly pops back up, that's not that great. It might be reactive, but you can't take it on a limit order. You can take it from a confirmation. So you sit and wait to see what's going to happen around your area of interest. That's actually how I trade. I will very rarely get involved. Oh, it's a level, let's go in. I want to see price action reaction to the area. And over the years, I've completely moved away from limit orders, and 90% of my trades will be a will be a market order, sometimes maybe a buy stop or a sell stop. But aside from that, on intraday in particular, I don't really use limit orders. So hopefully this is helpful to you to start to see some of these areas a little bit better. Let me know if you need further explanation on this. But the gist is that you want to look at the wick to the downside for demands, wicks to the upside for supplies, and then not take the wicks to the opposite areas, because those are market shifts, and that's where you want to put the edge of the demand or supply at. Okay. All right, Cedric says, to find better entries when the market is slow, do you zoom out with higher time frame? Actually, I do quite the opposite. When the market is slow, I zoom in, and then I look at the profile for my trade locations. And usually I like to look at session highs and lows for my areas of entry. If we've had like a very big movement as a result of, let's say, CPI or something like that, I will take the range that gets established after that, and then I will use that to ping my range bound trades, because in those days most of the moves are already done, so there's no juice left in. So yeah, quite the opposite. Instead of zooming out when there's no movement, I zoom in, and I've been known to even use bookmap and 2-minute candles to find my snipery type entries, because trade location on range bound days is everything. You just don't have another option. By the time that you've waited for a 30-minute chart, you're already at the middle of the range where your target should be on a range bound day. So yeah. DM says, please explain in detail the logic behind placing reversal trades in GC and RBOB near the London session close. In addition, does the same logic apply to other commodity products such as ZS? I have not traded ZS much at all, so I don't know. But the logic behind, okay, so you don't always place, I don't know where you got that from, but, placing reversals always on GC and RBOB near the London session close. It will be very contextual, right? And sometimes the reversals, if you're talking about failed auctions, they absolutely have nothing to do necessarily with the session close. But they will have to do with the fact that there is always people taking profits around there. Now, how big of a move that is, that's completely, like sometimes I stay out of it completely. You're referring to the Euro close things, but very specific things need to happen in order for me to get involved in that. If you are failing the auction around about that time, that's the setup that I would take irrespective of Euro close. But if you're not failing the auction and we have the Euro close, I'm staying out. Like, that's not a trade that I will take every single day. And contextually, we also need to make sense of that trade from a slightly larger time frame. Usually around that time of day, we will exhaust the average range for that session, or even the average daily range, if that's what's happening. But, it's not necessarily the London session close that causes the trade, if that makes sense. It's the setup and playbook around that time of day. But, again, if there's no failed auction, if nothing is reversing, you don't reverse. You just stay out, right? Yeah. And then commodity products. So I don't know whether that applies to agricultural products or bonds and stuff. Probably not bonds because they don't have enough movement. And when it comes to any kind of agro products, they generally tend to be a lot more single directional. The only time I would look to fade those would maybe be into settlement, their own settlement, which is, I think, earlier. I think they settle kind of like corn does, doesn't it? Isn't it like a similar... Again, I'm not an agro trader. I just know that from the stuff that I've learned over the years, but I haven't traded agro products, so I don't know that much about them from a practical point of view. I do know that they're not as V-shaped, so I don't think that the euro close will have any impact on them, because I don't know whether anybody trades corn and soybeans during London. That's like a very kind of CME and CBOT related activity. Therefore, I'm going to say no to that. But again, I can go back to the charts and kind of do my little back test to see whether there's merit to that. However, last time I looked at corn, for example, the only squiggle and slight reversal that I could surmise would be the reversal into its own settlement, right? All right, guys, that is it for the day. I'm going to sign off now. I am on fast markets today. That's going to be a laugh with the inventories. But anyways, if you're liking what you're seeing here, make sure to click the like and obviously subscribe to Topstep as well. May even want to check out my channel, which is down below this video. And that's pretty much it. Let's try and have a bit of a rest. And fresh eyes always much better when it comes to trading a different session. So I don't like to go in from one session to the next without any kind of a rest. And I advise you guys to do the same. That's it. I will see you for fast markets. This has been TopstepTV London session. And yeah, let's see what the day brings. Take care.